Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at three much followed oil stocks and their technical outlook for 2014. Starting off with Gulf Keystone, where we've got consolidation after the massive spike to the upside at the beginning of 2012. I would err on the side of bullishness, not that I want to, but if you don't, you tend to have rather a negative reaction amongst private investors. And also, there is the technical backing here of a rising 200-week moving average running through around the 170 pence mark, and a rising trend channel from the second half of 2011 running through around the £1.60 mark. So, on that basis, it is possible to give the benefit of the doubt to the upside, possibly while there is support holding at the November intraday floor of £1.48 on a general view, and while the shares hold above that, we're looking for a retest of £2 to £2.50 in the first quarter of 2014. That, I suppose, is the most optimistic scenario. If you're cautious here, you'll probably wait for a weekly close at least above the 50-week moving average at £1.75 before going long, in the sense that would be a decent momentum buy trigger. Moving along to Xcite Energy, which has been struggling of late. Similar sort of setup here to that of Gulf Keystone, in the sense that we're in the aftermath of a massive spike. In this case, it was in 2011, and consolidation at and just below the 200-week moving average, now at £1.34. If you're a cynic of the stock like me, you might actually want to wait until that was broken, the 200-week line, before going long. Less cynical, maybe a break of the 50-week moving average at 107 pence. If pushed, I would say that we are probably at the bottom of the range here. That's been my view. A sort of range of 90 pence to sort of £1.40 has been my view for the last year and more, as the setup at Xcite Energy, and I don't see anything here which changes that. There's also an RSI support line here running through current levels too. So hopefully the shares will hold around the 90 pence level and remain in the range up to £1.35, £1.40, the 200-week moving average. Finishing off with Bowleven, and here a painful situation in the recent past, horrible breakdown from above 50 pence. Again, I would like to give the shares the benefit of the doubt, even though in this case we've got a falling trend channel from the end of 2011. But it does look as though the shares are finding some support towards the floor of this channel around 35, 34 pence. And also there's an RSI line of support as well in the oversold area down to 25, which should mean that we see a reasonable rebound going into the first part of 2014. If you're cautious, you'd wait for a break of the 10-week moving average at 44 pence as a momentum trigger, but really it does look as though we've got a decent chance of going up from this level, and at the very least you've got a decent risk-reward ratio, given that we're so near to the floor. Initial target towards 60 pence in the first quarter of 2014. That's it from me. See you again next time.